What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. I'm a little under the weather today, so I'm going to try to make this quick, save my voice. But essentially, the topic of today's walkthrough is going to be the importance of incorporating data into your technical analysis to help strengthen your conviction and improve the odds that a trade works in your favor. Okay? I'm going to look at IWM to illustrate this point today with both an opportunity to play downside and upside on the same ticker in the same day using TA and data combined. All right. So let's look at IWM on the daily chart coming into today. Yesterday, it broke out of this falling wedge after a big volume pop from the lows last week. And today, it opened and filled a bear gap, okay? So, we had this gap here open on the daily, and I'm a big fan of playing gaps as both support and resistance, depending on their direction, and also as pulls of liquidity, as price targets to go fill gaps, all right? And a lot of times, once gaps fill initially, there's going to be a bounce the other way, a reversal. So in this case, it's a bear gap. We fill it, and a lot of times you're going to reject. And that might not always be this drastic, but it's something to keep in mind. It's a place where if you've been long, you want to take profits, a good chunk of profits here. Now, as traders, how can we play this? Well, obviously, you could look to go short there. But one thing that stuck out to me today, using this new website, Edgeful, that I've been checking out for the last couple weeks, and I'm really liking it so far. We can see that if we look at IWM, it really struggles on Tuesdays. For whatever reason, over the last year, it's had great Mondays, closing green 70% of the time, but on Tuesdays, only able to close green 37% of the time, excuse me. In other words, it closes red 63% of the time. All right, so now coupling those two ideas together, the idea that this is a bear gap that's filling after a breakout, a little bit extended, where I might take puts anyway. That might be all I need, the only reason. But being able to see this data as well can give me, maybe I was on the fence about taking that position, and that data would help push me over the edge and take the position, and it end up being a really nice trade. Or maybe I was going to take the trade anyway, but I didn't know how much I trusted it, or maybe I was going to go lighter size or take profits quicker. And having this extra data that's telling me how frequently we close red on Tuesdays. Here's your previous day's closing price. That means, the data is saying we're going to close below this level, even though we gapped all the way up here. All right. That's a $2 move just to go from green to red. That might give me the conviction that, hey, there's a good chance that we're going to at least fill this gap down and maybe even break through and close under. I can hold my contracts longer with some more confidence and make more on this trade than I would have if I was just playing the technical setup. I might have sold way earlier because, in fairness, this was a strong breakout, and a lot of people are hyping up IWM lately as, being the breadth indicator, and everyone's watching it to see if it'll turn around and lead the market up and continue the bull rally, right? So having that data there is very beneficial, okay? But let's keep going. There was another play to be made today on IWM, and it was to the upside. And the data backed it as well. Okay, so we come up here, we fill the gap, we sell off. We go from green to red. Here's your previous day's closing price. We start to go red. It makes sense to start thinking about maybe a place that you could get in to go back long, especially if you were bullish, but maybe you missed the falling wedge breakout on the daily, and you were saying to yourself, we're a little extended now. It's hard to buy calls up here, and you were right. But, man, if they give me a pullback where could I get in at? Okay, so my eyes on the chart are going to 194 because there's tons of confluence here, right? We've got big GEX level. We've got a bunch of dark pool accumulation. We've got that unfilled bull gap that was created the other day. We've got the 9 and 20 daily EMAs stacked, and we're kind of retesting the falling wedge breakout. So 194 is like my high confidence size up swing level. But for a day trade, or even to start nibbling some contracts for a swing, let's look at the average true range of IWM, okay? On Tradie Ticks here, we see that the average true range of IWM currently is 3.5, okay? $3.50. Here's your high day, 198.59, and we sell off all the way to this 195 psych, very, obvious spot that we could possibly bounce, big psych level, right? What else is it? It's $3.60 from high of day. We know that the average range, true range, is just 350 lately. So we basically are starting to max that out. But what we might not know is that notable? Does it matter? Well, in IWM, it respects its ATR 70% of the time in the last year. 251 days, 175 of those, it's going to stay within its average true range on a daily basis. Okay? That's pretty good conviction right there. So at this point, you might just say, okay, well, I'm going to get long here, just right at 195, right? We have the data to back us up. We've sold off a lot. This is a big psych level. I didn't want to take that aggressive of a stab, but what I started to do was just watch, okay? And I have a video on this as well, Cycles of Price Action, Oliver Kell, something he came up with. It's very helpful, and it's a pattern I think all you guys need to learn and start to get so you can see it quick. My video is showing it on the daily time frame, but it works intraday as well, and I'm going to show an example of it here. It starts with the reversal extension. That's this big candle here. It hits a low a day, big psych, big extension. The next thing you're looking for is what's called a wedge pop. All right, so you can see here that we start to form a wedge, and it pops there. We break out of it, okay? The next thing you need to see is the EMA crossback. Your 9 and your 20, your 9 crossing back over the 20 happens here. And then finally, what's called the base and break. And this is where you enter. You want there to be some consolidation where price heads back into these EMAs, they catch up and act as support. You're going to be entering in here somewhere on the EMA test, calls, and then you base, and then you break. And it rode those 9 EMAs, and that's a nice move, all right? This is about as good as you can get for a high likelihood win on a trade on a bottom pattern, right? Like you could have slapped at 195 and it would have worked for you. And you had the average true range on your side. We maxed out the average true range. We know 70% chance that it's not going to exceed it. Okay. But if you're even more, if you're patient, you increase your chances of this working using the cycles of price action for a nice, let's say you got it around 195.80, 195.90. That's a dollar move. Really nice on IWM to end the day. And then it closes back red like our data indicated it had a, pretty decent chance of closing red. So that's today's lesson, right? Any way you can incorporate data into your technical analysis. I mean, technical analysis for me is the foundation of everything. But being able to put that cherry on top, that little extra bit of conviction, or just spark an idea of things to look for, that you might not have ever considered before, or you had a gut feeling about, but you couldn't really verify it because it's just hard to manually look at the charts and go back through history like that and and figure out the numbers and crunch the numbers. This platform is very helpful for that. So I'm going to leave a link down in the description again if you guys want to check it out. I think there's a 7-day free trial right now. Check it out, and hopefully it helps. If you guys have any questions about anything I talked about in the video today, let me know and I'll help you out.